And we got another one today. Secretwars. Going to the TSX. BMO Bank of Montreal. Let me check that out. I'm pretty sure that's what it is. BMO Bank of Montreal. All right. TSX is in a stage 3, working its way through that. BMO, I think this is a good candidate that's presently in stage 3. So we're going to keep an eye on that for either a stage 2 continuation or a stage 4 breakdown. Right here we have, get a straight line. Here's my resistance. Here's my support. And notice I'm trying a log scale right now. Logarithmic scale. Instead of seeing jumps from 50 to 60 being represented at the same distance, now it's a percentage wise. So if the stock goes, let's say from 10 to 20, it's going to take the same space as if the stock goes from 100 to 200. And that should alleviate some of the hockey stick formations. And he's a trader from stageanalysis.net. Thinks I'll see better the stages. So I think the best way is just to practice, try it, and see if it works. If having a log scale is going to permit me to see the stages in a more precise fashion. I have no worries with that. I know that trend lines, they're different on the log scales and arithmetic scales, but since I'm playing horizontal lines for the breakdowns and breakouts, it shouldn't interfere too much on that sense. We'll just go ahead with that and see how that works. I might flip sometimes from log to non-log and observe differences. That's I think one of the best ways to do it. And see what we're best with. What do we have here? I just want to go BMO before we attack this move. I just want to see right here what we had. We had a nice stage 2. If I back out just a little bit, practice, and look at that. Wow. Okay. So right here we had a nice stage 1, nice bottom formation. Right here. We had maybe head and shoulders bottom or a definite bottom. We're above resistance right here on this candle, and I'm pretty sure that it was good volume. You get a feel when you see that breakout candle finishes with no wick on top. It just pushes through above the trend line, above 30-week moving average, above the resistance that you could see in the cloud, the Ichimoku cloud, and you see right away, see that's the breakout candle right there. You see I had to build up a volume, maybe not twice the average of the previous 4 to 5 weeks, or maybe at least 30% more. And then you had the red candle, light volume, and volume builds up as it goes up. It's really nice, this one. Red candle on low volume. Not this one. This one had a sizable volume, but then low volume on the pullback. And okay, the stage 2 didn't really take off. Okay, where's your sell stops? Traders and investors, you would have put it between, at least investors below 30-week moving average, below the bottom of that formation. And if you really want to play it safe, you could have said that's the bottom. Investors would have put their sell stop right below here. And traders, usually 46% below the breakout line. If you can't find a safe spot there, below a round number, go for right below the 30-week moving average just to make sure. And off the price went, pullback, price went towards almost up towards previous highs. Traders would have put their sell stop here. Stan says pullbacks for the 8 to 10% pullbacks for the initial sell stop move for the traders to make sure really like you let that big pullback come back in. So I'm not quite sure how much percentage that is. I would have moved it up if the price action, if it pulls back on low volume and the volume picks up on the way back, I would probably move my sell stop up for the traders. Investors right down here. And okay, here you go. So traders triggered out right here. And investors are still in. And investors would have been triggered out. You would have moved your sell stop right here. Pull back, move back towards the high. And you would have been triggered out right here when you would have... so not a super stage 2 right here for this big base. Price action went back in. That's all right. Don't keep it. This price action could have kept going down and down and down. You don't know what could have happened. Always wait for continuation breakout if ever it wasn't meant to be right now. And that's what happened right here. You had the breakout, continuation breakout right here at this candle. Wait, was there volume? No, there wasn't enough volume. You could have probably said, that's not gonna be ready. It pulls back on low volume, and then volume picks up, and then you could say, okay, here is the breakout where you would have entered, right here. And off it goes. You play the classical Stan Weinstein ways. Pull back on huge volume, not very good. And right here again, pull back on huge volume, not good, not a good sign. See, you never reach these previous highs. If it would have pulled back on low volume, like here, price action would have kept going up, and it was just not meant to be right now. So you could have moved your sell stop here if the price action started going back up towards. Investors also here and getting triggered out. If you don't see a trendline violation, that's your moved up sell stop. That's when you get out here. And traders and investors, you would have moved also. Investors should not stay in the stock below 30-week moving average unless you have I think an aggressive 30-week moving average still going upwards with a nice slant. And right now at this point, let me back out. Let's say I'm an investor. I see I have this candle here, and that closed. Most chances it would have been a good move to bail out. Remember again, this is almost where'd you enter? This candle here, you entered right here. So right now the traders way made money. You're out. And if you saw here at this candle, even the investors made money. You're in the clear. It might not be a 5-6 to 1 risk reward, but you're in the net, and it gives you a chance to re-enter at the price at a good moment where the stock's really going to explode. And you see continuation breakout right here. Volume not super duper. Trying to see here. See, the RSI wasn't crossing over the 50 line, but it was still going upwards. And let me see right here. I'm always... Price action was not going over the midway point, was still in bullish territory. And right here, I don't think we have the volume for the continuation breakout. Are we going to get it? And there we go. Here's the candle for... Always wait for that. The more I look at the charts, the more I really understand. Like Stan puts in the words, he repeats it, but sometimes... Yeah, it's an A+. I have my horizontal trend line, 30-week moving average going. Stan really says it's critical or vital. The whole system, if you don't have the volume, it really diminishes instead of reaching and being in the profits 8 times out of 10. I believe you'll get whipsawed a lot more if you don't wait for that volume signal. This is like the perfect volume signal over twice the previous 4 to 5 weeks average. Even if you miss a little bit of the action on stage 2, you want to ride it with the most momentum as you can. So right there, that's a beautiful continuation pattern. So we're in right here. That's where we're in. Let's do that sell stop. We're above 30-week moving average. Traders, investors, I would put their sell stop below round number here, below 44. So I would say 73.95. And off we go. See, pull back. Pull back. On increased volume, but not exaggerated like these big candles. And gain volume on those green candles. Stand very observant on those stage 2s. Pull back. Okay, right now. This was a hard one. Would move our sell stop right here for traders. Investors would move their sell stop here. Is there a valid trend line? Always check for the valid trend line. I keep forgetting it often. 1, 2, 3, and you would have exited right here at this candle here. Right here. You would have exited the traders and investors. Traders would have exited at the valuation, half the position at the trend line. Investors also half of the percent trend line. And that's where you have to have this planned out first before for the remainder half position for the investors. There's a provision that investors can or they should have their sell stops exit at the same time as traders when they reach close to the end of the stage 2. Well, you don't really know, right? It's the end of the stage 2. You have a trend line violation. It could keep going up. I like treating my investors the same way. If a trend line violation usually happens, what I've noticed is that price action goes sideways for a little while. And if I'm an investor, I think I want to exit at that same time and re-enter as a trader would on the continuation move if there's one. All right, let's just move it up here. Practice. And okay, well, there we go. So that would have been a good move. Take everything off the table, right? Have the position here and the remainder half at the previous correction, and the previous correction was below 30-week moving average. So at the 30-week moving average, investors and traders would have removed out of their position. There you go. And there we go. Nice stage 3. Here's stage 4 right here below the cloud. Right there. On this red candle right here. And down it went. Trend line. I really like the trend lines. You avoid a lot. You don't have to wait to exit with it's really aggressive, but it really makes sure you're in the money and you get off and you save a lot of time instead of staying in the stock and it's zigzagging sideways for a while, bouncing off the 30-week moving average, going back up. Trend lines, it's a direct trend. It's violated. It most likely always slows down. I haven't seen a trend line violation where it just keeps going back up. Sometimes, there's maybe a volatility in the market and trend line gets violated and it keeps going up. But most of the time, 8 times out of 10, it just moves sideways or means there's a slowdown in the current trend. So I like using them a lot. And here we are, some resistance. You see how that cloud just bounced off that? And we're stage 4, and this is stage 1. And That a breakout candle? Yeah, the volume's almost twice as much as the previous 3 weeks. Is that A plus? Maybe A? If I had other candidates, I would probably find an excuse not to play this one and play other candidates. But you're above 30-week moving average, above the resistance line, above the Ichimoku cloud resistance one. It's not that bad. What happened here after that? And stage 2 keeps going up. Pull back. Move up. Pull back on lighter volume. Sell stops would have been moved here. Entry here. 1 sell stop move. 2 for the traders. Investors right under 30-week moving average. Pull back. Move up. I sometimes look at the V's on the RSI. And weeks has gone by. Do we have an aggressive trend line? See, when the trend line gets close to a 30-week moving average, it's kind of your 30-week moving average, because you know you're going to bail when it's violated. So you could still draw it. Maybe there's a more aggressive one. You need 3 points to draw it. And right now, I don't seem to have one. And that thing just skyrockets. Oh, okay, what do you have here? Any pullbacks along the way? Pull back. Two, no. All right, here maybe. Either case, if you don't have the trendline violation, traders bail at the 30-week moving average cross, and so should investors at this stage. Investors, like if it's really at the beginning, you could probably stay in and go through the whipsaw. But the moving average starting to flatten out. If you didn't move your sell stop, you're not going to wait until you get back down to your sell stop here. That's too much of a drop. You don't have any close sell stops because of valid pullbacks. Then you would bail right there. This is very good, guys. All this practice. I'm doing it. My brain's recording it. I know you guys are watching. But you should try to do the same thing. Put your favorite music, do some, and just get into it like a boxer is going to do his routine. He's going to warm up. He's going to hit the bag. This is the same thing, right? Practice all the tools you have. Practice the Stan Weinstein approach. Practice classical chart patterns or whatever you like. And you got to keep practicing until you have a plan for every action. No surprises. It has to be drilled into your brain. All right, you see? And now, nice stage. Well, I'd like to call it stage 3. And I could easily call it stage 1. It's very good to see both sides of the metal. We get some black space. And look at that log scale, man. Bam. Thank God for computers. I'm going to put my alert right here in case for the bullish scenario. So we have a close above 105. We're continuing stage 2. If we have a close below 90, we have a stage 4. And now the more we move sideways, laterally, you see that cloud? There's not much, there's no resistance at all on top. Barely any support to go through here. So if we could have a few candles, I wouldn't trust any breakdowns from this area right here until we have a close under that candle here. And then we have this support that was identified right before. So let's just see how it morphs. Might need a few more candles. But this could be a 1, 2, maybe a head and shoulders pattern. It's fun imagining. Left shoulder, top, maybe a small bounce here, and then a crack below 90. This looks like a disaster about to happen, guys. But keep in mind, it could still be an upwards move, so put the alerts either case. Don't be blinded by any move that could happen. You're not a bear, you're not a bull, you're just a trader, and you trade price, and that's it. I added some more alerts just to get back. If ever the price action starts moving, I get these extra alerts. They're free, guys. They're computers. Use them. I don't know how the guys did it back in the days. Maybe they had secretaries or interns, but this makes it a lot easier to scan a lot of charts. All right, BMO, your definite stage 3 and maybe stage 4 or 1. Ciao.